Welcome to the Real Estate Way to Wealth and Freedom podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
Hi, and welcome to the Real Estate Way to Wealth and Freedom podcast, episode 275. Hi, I'm your host, Jacob Ayers. Welcome back to this week's Friday Fundamental. Hey, it's been a few weeks. I'm so glad you're here. Happy New Year and new decade. It's 2020, and I couldn't be more excited for the future. I hope your year is off to a great start. If you haven't thought about the next year or even the next decade, there's no better time to start than now. Setting goals is the first step in turning your dreams into a reality. There are so many great resources and tools out there around goal setting. Learning to organize your thoughts, turn them into goals, and pursue them with action is one of the best recommendations I can make to you. Goal setting has been a journey for me, from starting with New Year's resolutions to writing 10x goals down every day and to where I'm at currently. Now, I've found that writing my goals down every day helps keep me on track and focused on taking action every day. Well, okay, I admit there are days where I slack. One of my current favorite resources and goal-setting tools is the Intention Journal, designed by Brandon Turner and published by BiggerPockets. This is a 90-day journal that guides you from setting 3 goals to accomplish in the next 90 days, then provides a roadmap by coming up with a weekly battle plan, which is executed with daily action. It's simple yet effective, and I highly recommend you check it out if you're looking for some kind of journal or goal-setting guide. So with all that, let's jump into this week's Friday Fundamental Market Evaluation. The 3 most important things about real estate you may have heard are location, location, and location. Now, this is in part because you can do a lot of things to your investment real estate. You can fix it up, paint it, clean it, change the property use type, use different types of debt and equity to structure the deal, and pretty much everything under the moon, except you cannot move it to a new location. That's one reason markets are so important. While the market is important, it's not the only criteria you should look at, though, when evaluating real estate deals. As Joe Fairless says in his book, The Best Ever Apartment Syndication Book, the market you select means very little if you can't execute your business plan properly and stick to what he calls the 3 immutable laws of real estate investing. These are: buy for cash flow, not appreciation; 2, secure long-term debt; and 3, have adequate cash reserves. By following these 3 laws, your investment will thrive in any real estate market. So with that, let's take a look at some qualities you'll want to consider when evaluating a new market. To simplify things, let's think about what you really need as a real estate investor. You need people to live in your real estate, and those people need jobs to pay for a place to live. People and jobs are what it comes down to. Now, there are 6 factors that will give you an understanding of the people and jobs in any market. They are unemployment, population, population age, job diversity, top employers and businesses, and supply and demand. So let's start with unemployment. Tenants need a job so they can pay rent to you, the landlord. You can find how many people have jobs or don't by tracking the unemployment rate using government data on factfinder.census.gov. This is a great resource I highly recommend you check out. I'll link it here in the show notes. That is factfinder.census.gov. From there, you can find all kinds of data tables. So what we're going to do is look at unemployment rate trends in a particular market. Most importantly, you're looking for a downward trend in the unemployment rate, meaning more and more people are gaining employment. This indicates a good, healthy job market. The next is population. You want people to live in your market. After all, they are who will live in your property. More specifically, you want a growing population. Once again, you can find population data on factfinder.census.gov under annual population estimates tables. And look at the 5-year trend. Has that population increased or decreased? What we're looking for here is an increase in population year over year. Now, population age is a factor too. While there may be a large population, you might specifically be targeting a certain demographic for, let's say, your apartment community. Maybe millennials, for example. You can find population demographics on the census.gov site in the Demographics and Housing Estimates table linked here in the show notes once again. The fourth factor in your market research is job diversity. Job diversity is important because you don't want your market tied to one or two industries only. If that industry is in a downturn, then it will likely lose jobs and population. Think about Detroit in the automotive industry, for example. You can find industry information at the census.gov website, searching under income tables, specifically in the selected economic characteristics tables linked here in the show notes. You can find the number of jobs by industry, giving you an idea of how diversified the jobs in your market are. The fifth factor is top employers and businesses. You also want a diversified job market across many different employers, not just industries. A market with only a few large employers can be too dependent on the success and outcome of that particular company. If that employer moves locations or shuts down or downsizes or whatever that might be, then your market loses a large portion of jobs and likely population. This research takes a bit of digging. Typically, you can just find the largest employers in a market with a quick Google search. Simply search your city plus top employers and list those out, looking at who those employers are and what percentage of jobs they have in the market. Lastly, we want to touch on the supply and demand of rental property in your market. Sure, there may be a lot of people with good jobs, but if there are twice as many rental properties as there are people, then likely you'll have a hard time finding people to live in your property. Supply and demand is a balance. You can start by analyzing vacancy rate and median rental rate trends in your market. You'll want a downward trending vacancy rate and an upward trending median rent rate, meaning the vacancy rate is getting lower and lower and the rents are growing higher and higher. These data points can be found at the census.gov website under selected housing characteristics tables, linked once again here in the show notes. And lastly, as part of your supply and demand analysis, you want to look at the supply side of the rental properties by analyzing how many new properties are being built. You can find this information at a related but different site called the Building Permit Survey on the census.gov website. You'll want to look at permits for 5+ unit dwellings and look at the trend in permits granted. With these 6 factors, you'll have a good idea of how your market has fared over the recent years and reasonable expectation how it will continue to trend. Once you have identified 2 to 3 markets, you can begin to start your property search for a property that meets your investment criteria. Well, that is how you analyze a market, and this week's Friday Fundamental Hey, for all of those links to the census.gov website, you can find those in the show notes, along with the links to the Best Ever Apartment Syndication book by Joe Fairless and the Intention Journal by Brandon Turner. Highly recommend both of those resources. Well, hey, if you liked this episode, please let me know by going over and leaving a rating and review in whichever platform you're listening on. For more information, resources, and to connect with me, you can do so at www.jacobayers.com. Till next week, engineer the lifestyle you want.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. All investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC, exclusively.